The stock market in 2025 is dominated by a single undeniable theme: artificial intelligence. From chip makers fueling the AI boom to software firms embedding AI into their products, investors are scouring the markets for companies that can capture lasting value from this technological shift. Amidst the noise, one company stands out in a unique niche: Datadog. Datadog is not designing chips like NVIDIA, nor is it running consumer-facing AI products. Instead, it sits in the infrastructure layer, enabling enterprises to monitor, secure, and optimize their cloud applications. As workloads move into the cloud and AI becomes embedded across industries, observability platforms like Datadog become mission-critical. This positioning has led to bullish analyst calls, robust growth numbers, and a premium valuation that sparks heated debate among investors. In this deep dive, we'll explore Datadog's fundamentals, recent results, Wall Street expectations, growth opportunities, risks, and what all of this means for investors. By the end, you'll have a full picture of whether Datadog deserves a spot in your portfolio, or if it's better left on your watch list. Company overview: what exactly does Datadog do? Datadog is a cloud-native monitoring and security platform. Its platform offers more than 20 different products across categories like infrastructure monitoring, application performance monitoring, or APM, log management, database and network monitoring, cloud cost optimization, application security monitoring, or ASM, and security information and event management, or SIEM. In simple terms, Datadog gives developers, DevOps teams, and security engineers a single pane of glass to view performance, detect anomalies, and secure their entire cloud stack. With enterprises juggling hundreds of apps and microservices across AWS, Azure, and Google Cloud, this unified visibility is invaluable. Founded in 2010, the company has expanded rapidly and now counts over 3,850 customers, generating more than $100,000 in annual recurring revenue. This customer base includes some of the world's largest enterprises, cementing Datadog's role as a backbone of modern IT infrastructure. Recent results: solid growth and raised guidance. Datadog's latest quarterly earnings, Q2 2025, painted a strong picture. Revenue: $826.76 million, up 28.1% year over year. Earnings per share, EPS, $0.46, beating consensus estimates of $0.41. Net margin, 4.13%. Return on equity, 5.04%. Management also raised full-year guidance, projecting FY 2025 EPS of $1.80 to $1.83 versus prior guidance, signaling confidence in sustaining strong demand, particularly as AI adoption accelerates. What's more, Datadog's large customer cohort, those contributing over $100,000 in annual recurring revenue, grew steadily, showing the company is deepening relationships with enterprises. This expansion is crucial because large customers are sticky, often adopting multiple products and increasing their spend over time. Analyst ratings: Wall Street's bullish stance. Datadog is one of the most closely followed software stocks on Wall Street. As of October 2025, 25 analysts rate the stock a buy, 4 call it a hold, 1 analyst recommends sell. Consensus target price, $156.69. Bullish targets: Wells Fargo set at $190, Davidson raised theirs to $180. For context, shares currently trade around $151.57, suggesting moderate upside to consensus targets and up to 25% upside to the most bullish calls. The bullish sentiment largely stems from the company's AI-driven demand cycle. As organizations deploy AI models, they need robust observability to track performance, ensure uptime, and manage costs. Datadog, with its unified platform, is well positioned to capture this demand. Valuation. Premium price, premium business. Datadog's valuation is one of the most debated aspects of the stock. Market cap, $52.9 billion. Price to earnings, 433. Price to sales, 17.5x compared to peers at 11x and the industry average of 5.3x. PEG ratio, 69.7, reflecting the high growth expectations embedded in its price. Clearly, Datadog is expensive by traditional metrics. The bull case is that premium growth deserves a premium multiple, especially in the AI era. The bear case is that growth could slow, leaving investors with a richly priced stock that underperforms. Interestingly, some valuation models suggest Datadog is slightly undervalued with a fair value estimate of $162 compared to its current $151. This reflects assumptions about sustained mid-20% revenue growth and expanding margins.
Growth catalysts. Why Datadog could keep winning. 1. AI and observability convergence. The AI boom is not just about training models, it's about monitoring them in production. Datadog provides the observability layer for AI workloads, giving it a structural tailwind as enterprises embed AI across their apps. 2. Product expansion and cross-selling. From security to cost management, Datadog keeps broadening its platform. This allows the company to cross-sell to existing customers, increasing revenue per user and boosting net retention. 3. Enterprise adoption. Datadog's 3,850-plus large customers represent a strong growth lever. As these companies scale their AI and cloud use, their spend on observability platforms will likely grow in tandem. 4. Cloud infrastructure growth. As AWS, Azure, and Google Cloud expand globally, Datadog benefits indirectly. More cloud workloads mean more monitoring and security demand. Risks. What could go wrong? No stock is without risks. For Datadog, the key concerns are valuation compression. At 17.5x sales, any slowdown in growth could trigger a sharp re-rating. Competition. Hyperscalers like AWS offer native monitoring tools, and open source platforms could undercut pricing. Customer concentration. Heavy reliance on large AI customers creates revenue concentration risk. Profitability concerns. Margins remain thin. At a net margin of 4%, Datadog needs to prove it can scale profits as well as revenue. Insider selling. Executives, including the CTO, have sold significant shares recently, which can spook investors. Institutional and insider activity. Insiders, over the last 3 months, sold 1.3 million shares worth $170 million. While insider sales don't always signal trouble, the scale here is worth monitoring. Institutions. Hedge funds and asset managers own 78% of the stock, reflecting strong institutional confidence. Notably, firms like Gamma Investing dramatically increased positions this year, while Wealth Enhancement Advisory boosted holdings by 32%. Institutional buying often offsets insider selling, but it also means Datadog stock can be more sensitive to shifts in big fund sentiment. Investor strategies. How should investors approach DDOG? Given the data, how should investors approach Datadog? 1. Growth investors. If you believe in the AI infrastructure narrative, Datadog is a pure play. Its positioning in observability and security makes it a high beta growth stock for the AI era. 2. Value investors. Datadog is unlikely to appeal to traditional value investors due to its high multiples. However, those willing to pay for growth may still find upside if the company continues beating expectations. 3. Traders. With a 52-week range of $81 to $170, DDOG offers trading opportunities. Bullish momentum could carry it toward analyst highs, while any growth scare could create buy-the-dip chances. 4. Long-term investors. The most compelling case is for long-term investors willing to hold through volatility. If Datadog executes, expands margins, and cements its role as the observability leader, the stock could deliver significant compound returns. Conclusion. Datadog, high risk, high reward in the AI era. Datadog represents the classic growth stock dilemma. Stellar fundamentals, huge growth runway, but a demanding valuation. With revenue growing nearly 30% annually, strong enterprise adoption, and direct exposure to AI workloads, it's no wonder Wall Street is bullish. Yet investors must weigh this against the risks of competition, insider selling, and valuation compression. For growth-oriented investors, Datadog may be worth accumulating, particularly on dips. For cautious investors, it may remain a stock to watch rather than own until profitability improves. Either way, Datadog is undeniably one of the most important AI infrastructure firms to watch in the coming decade.